Thank you for tuning in to another edition of the Vulcan Report with yours truly, the Algo Capitalist. Today is Thursday, June the 28th, 2018. It's been a while since I've made a video, been extremely busy. So let's jump right into it. All right, today's videos is coming straight out of the trading room, things that traders want me to take a look at. All right, first and foremost, looking at the SPX, which is the S&P 500. As you can see, the market's been in a downtrend channel for some time. And now this week, the market is trying to break out of said down channel into an up channel. And this is on the weekly chart. However, on the daily chart, the market is down, down, down. So as you can see, hitting some oversoldness on the SPX. Markets are trying to look like they want to make a comeback. I'll pull up the daily so you can see it. All right, so downtrend channel on the daily, nothing has changed. Market's trying to find support down here at the 2700 level, okay, which also signifies the top of the Kumo cloud. If this can hold and the market can stage a rally for Take Back Friday, which is tomorrow, then it's going to hit resistance somewhere around 27.25 and 27.42. That's the first trend line resistance, the orange line, and then the second line is this magenta line here. All right, so that is your resistance zone up in here, okay? So from 25 to 42, that's where your resistance is, all right? Market closed at 16, just so you know. All right, so that's what you got. Downtrend channel is in effect, though. You are in a bear market, the beginning stages of a bear market on the daily chart. All right, you were there. All right, bearish momentum, negative pulse wave has been established, and you can see the trend lines are starting to turn down. Okay, so this is the first leg of the beginning of stages of the bear. If the second leg is developed over the next several days, then you'll know it as the trend lines come down, pushes prices lower, dropping below the Kumo cloud, and you end up down here somewhere around the 2650 level. All right, so that's what it looks like on the SPX. Now, if you want to take a look at the tradables, which is the E-mini S&P 500, of course you can do SPX options, but let's look at the E-mini S&P 500. You can see same thing. This is where the market is. All right, resistance is around 27.25 and 3/4 and 27.42. So that's where you are, and momentum is pointing down. So the market is going to try to probably see some profit taking on tomorrow, which means that the market will get some sort of a rally. If longs start to pile on as shorts are covering, then you could push the market up to toward the 2800 mark by the end of next week. But before we jump ahead of that, what does the market need to be for tomorrow? S&P 500 needs to close above 2739 and 3/4 in order to regain momentum. Failure to do that would open up more downside next week, possibly getting the market down to the trend line support, the orange line here, which is down at 2617. All right, so you're looking at a possible 100-point drop coming in the S&P 500. All right, so taking a look now at Bitcoin futures, folks. Bitcoin futures. All right, so we hit a new low. All right, hit a new low, 58.75. The first low was posted back here on the week of February the 5th of 2018, where the market hit a low of 58.80. I have been warning since then that this was a pointer and that this is where prices were headed. Came down here to a low point and then recovered, and now it came back, took this support out, and then gunned for the other support. So you just hit a new low now of 58.75. Currently, Bitcoin futures are at 59.35. All right. So I've been telling you that this was the case, this was happening, and that's what we're seeing now. All right. So you also got a gap here to deal with. Don't know when that'll come back into play, but as of right now, the market is in a free fall state. It's in an established bear market, and nothing has changed in the Bitcoin futures. You hit a new low, just like I told you you're going to hit. And I also told you that all things being equal, if this momentum keeps up, we have an initial target at around 4,400. All right, so you got this gap back here to deal with at some point. But right now, momentum is coming way off again. It's locked in. It needs to close above 61.21 tomorrow in order to put in a short-term bottom and bounce like you did back here. That's what needs to happen for tomorrow. If that does not happen, then more downside is where you're headed. Okay? So I want to put that out there. All right, taking a look at crude oil. Crude oil has done what I told you. It hit $74. I told you the initial target was around 75. I still think it's probably going to hit that before it starts to pull back and correct a little bit. This right here does not count. All the market did here was pull back enough to get it out of the overbought, and then that's it. All right, so this came off for overbought. You overbought here. Now you're not. It allowed the market to rally some more. A lot of geopolitical news going on right now with the oil and the tariffs. Just so much uncertainty going on right now. It's just ridiculous. Of course, there's a shooting just came out today. 4 or 5 people. Who knows how many people have been shot to death up in, I think it's Annapolis. So that's up in Baltimore, Maryland. It's just so much going on, folks. We got a Supreme Court judge that retired, and now Trump gets to put in his man. It's just so much going on, and it's hard to even take a breath and keep up with all this news. All right, take a look at the metals. You see gold just getting destroyed and hammered, falling, dropping below that Kumo cloud. All right, breaking that 1250 handle that I also warned about. Markets locking in on the downside. Don't know where you're going to find your bottom at, but for right now, the market is locked in. Market needs to close above 1282.10 tomorrow to put in a short-term bottom, which means we're not bottoming this week. All right, the market's in free fall. Taking a look at silver, which was overall stronger than gold for some time, also could not hold. All right, just like I remember the video I showed you, showing you all the failures, rally, crash, rally, crash, rally, crash, the same scenario. This music will not stop. All right, these Technique 1200s are nice, turntables, but the record is scratched, so it keeps skipping. Every time the market rallies right here, it crashes. Rally, crash, it just rinse, repeat. It's not stopping. It hasn't stopped in a very, very long time. And this is where you are. Now you're below the Kumo cloud on the weekly. Silver would need to close tomorrow above $16.46 just to put in a short-term bottom. All right, if it doesn't do that, then you're going to see more crashing into next week, getting back into the $15 handle, possibly even the $14 handle. All right, markets are starting to melt down. Also, where are all the people that was calling for the death of the dollar and losing reserve currency status, blah, blah, blah? The more they talk, the higher and stronger the dollar gets. Now it's well into the 95 handle. I told you and warned you about the $95 handle. I told you back when it was down here, I said once it gets up here, it's going to come up to the 91. And then when it did that, I said the next step for you would be now 92 and then the 95. You got there. Now you're in the Kumo cloud. and the market's going to decide what it wants to do from here. But right now, this market is locked in as well. What would turn the tide on the dollar? A close below $94.34 would put an end to the rally. But as of right now, that has not happened. So I expect more rallying, and it will probably get out of the Kumo cloud and maybe even head back toward parity. If that dollar gets above par, gets above 100, man, there you go. That's looking like what I told you way back when we hit here. I said, all things being equal, we could see the dollar get back to the 120s again, or 130s, 140s even, like it was back in 99. All right. And that's a long way from here, but I know the president's policy needed to keep this thing between 90, 91, somewhere around there, just to keep it ebbing and flowing. The dollar has strengthened a lot more than what the White House needs. They needed this weaker dollar, but now because of the tariffs and the trade wars, now the dollar is strengthening. So everything's out of whack right now. Everything's chaotic. Even the machines don't know what to do. We found out why the Dow was so crazy. The Dow was crazy because GE got kicked out of the Dow and replaced with Walgreens, I believe it is. So I knew that there was something that was wrong. Remember, I kept telling you, the price action in the Dow was not normative, and it wasn't volatility. It wasn't the normal course of volatility. There was something else, and I told you that the algos were picking up some abnormalities, and there was something that was wrong. Now there was no news, there was no nothing that they were telling you. They were just playing around with the index. They didn't care that people were getting burnt, destroyed, crushed. The Dow was just whipping all over the place. The Dow would be down 300-400 points, and all the other indexes were up and positive and green on the day. So none of these things made any sense. And then they came out and they revealed, oh, by the way, GE just got kicked out of the Dow and we replaced it with Walgreens. They knew what they were doing all the time, but they didn't care about, the retail guy. They didn't care about anybody, even the institutionals. They didn't care. They didn't tell anybody anything. They just did what they wanted to do. And that in and of itself is a form of interventionism. All right. So, and also manipulation. All right, playing around with the indexes like that. They could have done this quickly and even quietly, like over the weekend or something, or gave people heads up so they could decide what they want to do. But nope, they did this rebalancing act. The wildness came all over the place, and now that it's out, markets are trying to settle down and find their footing now. So that's what you've been seeing. Just so much going on. So much is going on. And this is just where we are, folks. All right, so now that we have GE kicked out of the Dow, the other indexes can also decide what they want to do. There was mad breakdown in the tech sector and the Russell. Let me just pull up the mini NASDAQ for you so you can see what I'm talking about. The NASDAQ was pretty strong, way stronger than the Dow and whatnot, but now look, it's in danger. It needs to close above 71.15 and a quarter tomorrow, or it's going to be down on the week and lost momentum and open up the floodgates to fall precipitously next week. Same thing with the Russell. Okay, so let's take a look at this Russell. See, Russell's topped out temporarily also. The Russell needs to close above $16. I'm sorry, I said $16. Needs to close above 1662.10 tomorrow in order to put in a short-term bottom. Now it can do it because it hasn't been as weak, but just remember too, the Russell has more to fall, just like the NASDAQ. The Russell and the NASDAQ have a lot more to fall than the Dow, since the Dow has fallen the most. See? So with that in mind, all rallies look to be sold at this point. As you can see, the Dow has fallen quite a bit back from here. And now here you are again. So you're right here in a very key support area, and you're in jeopardy of falling below the longer term support. So this right here is key. It is critical. It's a really big deal right now. All right, the markets are at a crossroads. Are they going to hang in there, or are they going to fall apart? And that's the question that has to be yet answered in these indexes. I believe that they're going to bump their head on the trend line resistance areas and then roll over again. You might get one more surge pop up, possibly before the downturn, but I think that downturn is still coming. So we'll see what happens here. All right. Just wanted to make a video, answer some questions, and put everything into perspective. For those of you that trade the post-wave price triggers, you need to watch those rally and crash alerts, but more importantly, remember, the price triggers themselves is your confirmation of the analysis. So if you get a rally or crash alert, all right, if the price trigger is triggered, that is your confirmation right there. All right, if something's going to rally or crash, that's how you know. So trade accordingly. With that being said, remember pulsewavetrading.com. You too can put the power of the pulse wave price triggers in your court, along with the rally and crash alerts. Know where the true momentum is in the market that doesn't show up on the charts. Trade the intraday price inflection points, or i.e. the stop runner. Stop runner allows you to see and know where the institutional stops are, so that you can run those stops and know where they are in the market on any given day. All right, so Pulse Waves will show you how to do that. All right, along with the tutorials. Come take the study course, learn all you need to learn about how to navigate these markets. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.